Good morning. Thanks for tuning in. You're watching the F&O Show, and today we will be analyzing the rollovers. I'm Navneet Saluja D'Souza.
Good morning, Navneet. Good morning, viewers. I'm Darshan Mehta. Let's first take a look at the headlines. Market begin the November series on a subdued note. The Nifty trades around the 11,900 mark. Escorts and Bank of India are seeing a rise in open interest. Both the stocks are seeing fresh long positions. Indian Oil Corporation is the top loser on the Nifty after the second quarter. EBITDA fell the most in 3 years. And Bajaj Auto's October sales fell 9% compared to last year. The stock trades with marginal gains currently. And Dr. Reddy's along with Yes Bank will report their second quarter numbers today. So those are the stocks that we need to watch out.
Those are your top headlines at this hour, and today is the first day of the November series. Let's take a look as to how the markets have been trading. Remember, the rally that we've seen in the last 5 days, it was just enough for the October series to finish in the positive terrain. So Nifty right now up about 19 points, inching closer once again to the mark of 11,900. Sensex, which touched all-time high levels yesterday, is comfortably trading above the mark of 40,000, and Bank Nifty is the one which is outperforming with gains of 200 points. Remember, in the last hour of trade, there was some profit booking seen yesterday on both Nifty, Bank Nifty specifically. You had certain private banking stocks like ICICI Bank which slipped into the red. But I think the broader markets are the one which are bucking the trend today. So both Nifty mid-cap as well as small-cap indices are registering strong gains. The market breadth is pretty encouraging. So to say, last when I checked, it was in favor of the, not only in favor of the advances, the ratio is looking pretty strong, 2:1 as we speak. And barring IT, all your sectoral indices have been trading with strong gains. I think media is bucking the trend owing to the gains seen for ZTV today. In terms of options data, remember the base now has moved higher considering the rally of 450 points that we've seen in last 5 sessions. If you look at the maximum open interest concentration for next Thursday expiry, that's on November 7th. It's at 12,000, followed by 11,900 call strike, and on the put side, 11,800 is acting as a huge support level now. But going ahead, if you were to ask a wide range, I think 11,700 has a good support there. And on the upside for today's session, if we inch higher, I think yesterday's high can be kept in mind of about 11,945. But the range that we're getting, Darshan, is 11,700 to 12,000 now.
Yes, that's the broad range that we're looking at. But let's also take a look at some of the open interest gainers and the counters which have actually fallen on open interest decline. So if you can have that, Just Dial is seeing open interest build up of 12% on the short side. RBL Bank has managed to recover. Yesterday it was up 10%. So there is a bit of fresh buying that's seen on the counter. Escorts Post, the number is seeing high open interest build up of 10%, inline set of October sales number that came out. And Tata Chemicals has managed to move up in trade. In terms of counters which are losing open interest, you have NBCC, which is seeing open interest down 0.5%. The counter is flat in trade. Short covering is seen in Bharti Infratel at 200 rupees. It has fallen significantly, so 5% up. And EQUITIES holding is seeing a bit of short covering that's come in today.
All right, so a lot of stocks to keep an eye on. And before we get to our guest on the show, remember, this is a special show where we are analyzing rollovers. So if you have any queries related to that, you can call us now on 022-4540-4141. In fact, you can write to us on our social media platforms, YouTube, Twitter, Facebook, with #AskPQ hashtag. Let's welcome our F&O expert then. We've got Amit Shah, technical and derivative analyst at BobCap Markets, who joins us right here in the studio. Hi, Amit. Good morning. It's good to have you back on the first day of the new series. So we begin with the rollovers. Tell us how the Nifty rollovers looking like. I think the broader theme has been in percentage terms, it's gone up, but in absolute terms, we're still light.
Yes. So definitely we had a last 6 to 5 days a very entertaining move on the market where we violated a key resistance mark of 11,700 and managed to sustain above that with good volumes and traction of open interest. So yes, as you likely highlighted, the base from where we are starting the November series is 1 crore 49 lakh shares. Compared to previous month, it was at 1 crore 55 lakh odd shares. But however, if you look at the percentage terms, this is the highest percentage what we have seen since 2007. Since the year 2007, and this was closely, this percentage rise was closely seen in August 2016 odd. So the percentage is 84% versus 73%. This is mainly on account of in the last 5 to 6 trading sessions, we have seen a massive rise in the open interest directly for the November to December series. So that is on account of which we are seeing absolute terms, the rollovers is slightly lesser, but in percentage terms, we are seeing a good traction for the November and the December contract.
So was it a combination of short covering plus long positions seen in the Weber series?
Yes. So if you see the open interest fall in the current series is mainly on account of the short covering. Wherever the Nifty has taken a rise, we have seen the open interest for the current month contract shedding from the base. So that's mainly on short covering and from long addition scenes on the November series.
What's the sense on the Nifty Bank? Are you seeing similar amount of traction? Because banks have actually managed to outperform. You're seeing counters like SBI lead the PSU banking rally. You know, some of the larger private sector banks have Axis Bank, ICICI. They have actually started to move. So how's the scene on the Nifty Bank index?
Well, so Bank Nifty has relatively underperformed to Nifty. Nifty gained over 2.6%, whereas Bank Nifty ended almost on a flat to positive note. The open interest base is in a similar trend to what Nifty has showed. The base is lower, but the percentage has inched higher, where the traction is seen for the start of the November and the December contract. So just to highlight on the base was close to around 8 lakh shares compared to 9 lakh shares the previous series. And in percentage terms, the percentage rollovers is close to around 64% against 58% odd. But somewhere the rollovers were slightly disappointing in terms of the overall individual stock specific. I believe there has been more traction on PSU banks compared to the private bank this time on the positive side.
That's surprising because all this while we've been talking about the private banks. In fact, the Nifty PSU banking index is up for the third or the fourth straight day. We've seen good gains for a couple of these PSU banks. But moving on, Amit, IT is something you've been bullish on for the longest time. And this was the index which was outperforming when the frontline indices were not doing well. But despite of having positive returns, I think Infi not performing in this series, still Nifty IT managed to close in the green.
Right. So I'm very positive to see, looking at the overall rollover data in the Nifty IT pack. I believe the short covering has been very significant. The base is now as low as 7,000 shares compared to the previous rollover time at 12,000 base. So we have seen a good short covering in TCS as well as in HCL Tech, NIT Tech. So these are the three counters which I'm focusing in the IT space, and I believe IT can see some kind of it has seen a time consolidation as well as price consolidation earlier. Now I think it is back in momentum.
Okay, so there is traction. So those are the three major indices we spoke about. What about the market-wide rollover? What's the sense that you were getting there? Were there enough rollovers, which are the counters which gave higher rollovers this time around that caught your eye?
So two things. The base of the overall market-wide rollovers has been quite less, considering the 12 stocks which moved out of the F&O for the October contract, and also a good amount of short covering is seen overall in the 149 stocks which are now in the F&O space. So the open interest base is around 375 crore shares compared to 393 crore shares the previous month. And this we have seen the short covering is mainly factored in by a good pull up in the large cap space this time. So we saw long additions happening in the mid cap space, small cap was muted, but there is a good short covering which led the market close to its all-time high levels, mainly on account of the short covering what we have seen in the large cap space.
Okay, but what about the market breadth? I think for the longest time we've had a negative market breadth. I think did that change this time around?
So last series also we had a positive market breadth, and this time also the market breadth is close to around 2:1, where 99 stocks have advanced in the October series against 49, 50 odd stocks which declined. So that is, and if you see within this advances, 58% of the large caps have contributed to these advances. So that shows that the traction on large caps was seen more in the October series compared to the other smaller indices.
Okay, so that's about your key indices, Nifty, Nifty Bank and Nifty IT. Remember, the theme has been the rollovers continue to be on the higher side, but it's in an absolute basis. I think we've been going light into every series for the last 3 or 4 months. But let's also chat about sector specific. I mean, let's begin with the positive rollovers. Which are the sectors according to you where rollovers stood out?
So we had seen some pain in the auto and auto ancillary space in the last, I think, 3 to 4 months' time, where the rollovers were also very much muted. But if you see this time, the rollover activity has picked up. Very selective stocks, both in the auto as well as in the auto ancillary space. I'm seeing a good sense of rollovers which has happened. So auto ancillary, consumer goods, engineering, especially stocks like Siemens, Voltas, all these counters, and technology also will be on the positive side. So these are the 4 sectors which I'll be keenly looking for the November series, where I believe these sectors can see some outperformance.
So in the auto side, which were the stocks that, which were the 2 stocks which saw the most rollover on the long side, and are there any short stocks which are still seeing short rollovers?
So two of the stocks which are seeing on the positive side, one in the auto space is Bajaj Auto, and in the auto ancillary space, MRF.
Okay.
Nothing has been, none of the stocks has been completely showing on a weaker side. It's neutral to positive.
And on the consumer which side, which stocks are you talking about? Engineering, you spoke about Cummins and Voltas. What about consumer goods? Which
so
are the
consumer, I like Tata Global. We saw a massive move yesterday. Colgate is also another stock which has seen, in fact, after I don't remember last time when it has seen such a good rollovers. So Colgate can be looked at, and Bata India again in the consumption space can be looked at.
Okay.
Okay, so that's about the positive rollovers. Let's now talk about the negative ones. And interestingly, Amit, private banks, construction is not a surprise, power is not a surprise, but I think the private banking space is a big surprise this time around.
So that's where the divergence is coming. Technically, there are private banks like ICICI Bank, Axis Bank, HDFC Bank. They have still not shown any kind of a weakness or a negative trend. But however, the rollovers in terms of the open interest since the last, comparing to the previous two series, it has been very much muted, where I was anticipating that there can be some good follow-up open interest traction for the November and December series. So that remains on the negative side, where considering the previous two series when they have seen some outperformance, but the current month, the rollovers have not happened in line compared to the what price activity it has showed for the October series. So that remains on the negative side. Other two sectors, power as well as on the construction.
I'm very surprised, Nonit, when yesterday SBI was managing to rally and Axis and ICICI and HDFC Bank were doing well. Somehow yesterday they didn't move at all. In fact, they ended at the day's low, ICICI or beat an HDFC Bank. So there was negative traction. IndusInd, I think, was one of the only one which has been weak, but for the past, I think, 2 days is seeing traction. Anyone on IndusInd Bank as such? It's managed to move today. Obviously, there are fundamental news in terms of a new CEO that could come in, but how should one play IndusInd Bank? What's your sense?
So if you look at the overall rollovers against 1 crore 23 lakh shares the previous month base, the rollovers have happened to 1 crore 28 lakh shares with the price activity which is on the negative side. So that suggests that mainly the rollovers have happened on the short side.
Okay.
Even if you look on the technical perspective, the stock, though it is showing some sign of a pullback, but there are multiple resistances on the upside. Key resistance being at 1420. Unless this is not crossed, I believe the trend can remain on the lower side.
Okay. For the day, it's bucking the trend. IndusInd Bank, after the management has indicated that they have zeroed down on the new MD and CEO, and they will make the announcement soon on that front. Amit, we've done with positive, negative, but what about the sectors where the rollover was just about neutral?
So oil and gas was one of the sector where technically I am comfortable with many stocks within that space, but the rollover had been quite muted for the November series. Another space is NBFC, which showed mixed signs of rollovers. Muthoot, Manappuram showed strong rollovers compared to the others, which were neutral. Metals again showed a muted rollovers, and pharma and healthcare. There were only two stocks, Torrent Pharma and DV Slab, which showed a good rollovers, but rest all were in line compared to the previous series.
What about GAIL? I think within the oil and gas pack, that's been gaining traction in the last few sessions. How did that pan out?
So definitely, if you look at GAIL, in fact, in the entire IT space, oil and gas space, that's the only counter which has seen a rise in the open interest compared to the previous two series put together. So, but in terms of price activity, it has remained muted. In terms of playing gas counter, I would be more comfortable playing Petronet or IGL rather than playing GAIL.
Okay, so let's now, we've spoken about the indices, we've spoken about sectors. Let's talk about stock-specific views. What views do you have? First, let's take some of the stocks on the positive side.
So, well, I have few stocks, as I mentioned during the sectors, that there are few stocks which I have already highlighted. But just to reiterate, in the consumption space, I would be comfortable playing Bata at this levels. Another stock, Kolpal. In the engineering space, I'm comfortable with Siemens. The stock is hovering around its all-time high levels. ICICI Prudential, I have been quite positive since last couple of months. I continue to maintain that view. And in the pharma space, I'll stick to, if I have to choose between Torrent Pharma and DVs, both have seen good rollovers. I'll choose DV's Lab, mainly on account of purely on technical perspective. And within the IT space, HCL Tech and TCS both have seen good rollovers, but I'll choose TCS over HCL Tech.
Okay, so top 5 picks, I think you've got ICICI Prudential, Colgate-Palmolive, Bata, Divi's Laboratories, as well as TCS on the long side. But Amit, on the short side, stocks like RBL Bank, EQUITIES, and India Bulls Housing continue to be on the weaker side.
Yeah, so the rollovers have been quite weak, but if you look at the last week of activity, most of these counters have seen a significant pullback. So definitely the risk reward on the short side will not be that comfortable, but however the rollovers have been seen on the weaker side. So stocks like RBL Bank, EQUITIES, India Bulls Housing Finance, and in the media space, just I'm keeping an eye on Dish TV as well as on Z. Though technically these stocks have given a significant bounce back today, but on the rollover perspective, it shows a divergence.
How did RBL, if you can say what you saw the rollovers, but how is it poised for this series? Because yesterday it saw a big bounce and corrected, then again it managed to bounce back by the end of the day, corrected, and again it's up. So it's giving all signs of signal. So if someone wants to take a position in RBL, how should one do it?
In fact, we've got a query. I'm sorry. There's somebody on YouTube who's holding 300 put of RBL. What would your advice be?
Okay, well, so RBL Bank, I have been many times in the show also I've highlighted that the stock is in a weaker structure. In fact, at 320, it given a target of 250, and which the stock had witnessed in the whipsaw. But now the stock has showed a reversal from 250 to 60 odd levels, and the volumes and open interest both are on the supportive side. Though the overall, if I look at a broader perspective, the technical structure is weaker. So one who is holding a put option will have to sacrifice some time in terms of the volatility, which is now poised on the positive side. So if you look at the resistance, the stock has multiple resistances on the upside, but the range of these resistances are now on the wider side considering the volatility in the stock. So in my sense, in this pullback, the stock can see some kind of upside towards 330 to 340 odd levels where there is a resistance. But my trend continues to remain on the negative side.
Okay, so RBL Bank, EQUITIES, India Bulls Housing are the negative bets which Amit is placing for November series. I want to talk about Yes Bank, Amit, and I know the move that one saw, wild move yesterday, was driven by some bit of news, but overall, let's discount the news bit now. If somebody wants to take a position on the charts, what are the key levels? Because if I look at the options data, maximum open interest on the put side, it is at 60 strike, whereas on the call side, it's 70, 80, 90, 100. So how should one play here if they want to take a trade for the November series?
So I would highlight a disclaimer. The stocks like RBL Bank, Yes Bank, the stocks which have seen intensity in the fall. Z, yes, we have DHFL. So all these counters are a victim of intensity on the downside. So whenever there is intensity which has played against the time, in a very short span of time, the stock has corrected so much, it is bound to see some kind of a bounce back. So your risk of trading to these kind of counters is always going to be on the higher side. So if I just have to give a long view, in case if there is a if this pullback looks sustainable, just for an example, the stop loss comes to close to around 55, which is more than close to 20% from here on. So that's the kind of a band what it has entered into. So in my sense, I would not jump onto the gun, though the stock was quite strong yesterday, but I'll respect more of a primary trend which is still negative. There are multiple resistances on the upside. Just for someone who is a compulsive trader into these kind of counters, the stock needs to comfortably trade above 80 to get some kind of a comfort for a sustained pullback towards 95 to 100 levels.
Okay. The other counter I just wanted your view on was Interglobe Aviation. I think decent open interest build-up has already been built on the counter. How should one play this counter?
So if you look at last month, the correction what it has seen, it has taken off almost last 6 months of gain. So that shows again the intensity with volume as well as in the open interest side. So the stock is in a downtrend. In my view, the resistance is at 1540. Unless that is not crossed, I believe there can be one more leg of down move where on the downside 1340 to 1330 levels can be tested.
Okay.
Okay, remember Amit highlighted Nifty PSU Banking Index has seen positive rollover this time around. I think the index is your top sectoral gainer right now, and today is the 6th straight day of gains coming up for this one. Amit, you didn't highlight any PSU stock for us.
So well,
in terms of top pick for the November series.
Yeah, if I have to choose one, I'll always go with SBI, considering the stock overall is in a good sideways congestion trend compared to the other PSUs which are on the downtrend. So SBI, though it has moved quite sharply since 280 odd levels, but still it is now hovering around the resistance of 315, once it sustains that, there is a further up move possibility towards 330 levels.
Okay, that's the view that's coming in on the counter. But with that, we have timed out on this edition of the F&O Show. Many thanks, Amit, for joining us today and giving us all the perspective on how the rollovers have managed to pan out and trade. But even if you need more updates on this F&O space, go to our website, BloombergQuint.com. There's an F&O page in which you'll get all the information and you'll get all the information related to futures and options.
Well, with that, it's a wrap on this edition of the F&O Show. Thanks a lot for watching. Stay tuned to BloombergQuint.